Okay, so you send this article over. Should you buy Ford while it's below $10?
Yeah.
From The Motley Fool. And this was published really recently, April 7th, 2025. So very timely, I think, for a lot of people.
Right. Yeah. Seems like it.
Especially when you look at that headline, should you buy Ford while it's below $10?
Yeah.
It's kind of begs the question,
Mm-hmm.
It was at like $9.58 as of April 4th. So, is this really a good deal? Or
Yeah.
is it?
Are we missing something?
Yeah, exactly. So I'm really interested to kind of dive into this and see what this article is really getting at.
Yeah.
And try to extract, what are the most important insights here? Because it seems like there's a few reasons why this would be a good buy.
Right.
But then they also mention some challenges that Ford's facing.
Mm-hmm. Mm-hmm. It is that classic question, isn't it?
Yeah.
When you see a well-known company like Ford with a stock price that's dipped, it's naturally going to pique some interest.
So I think our job today is to really look beyond those surface level numbers, and understand all the different dynamics that might be at play here.
Okay, yeah, let's start with, what makes this initially appealing?
Yeah.
So they point out that Ford's stock has dropped almost 9% over the last 6 months.
Right.
And, whenever I see a dip like that,
Sure.
I think, okay, this is a stock that might be on sale.
Yeah.
So.
For sure. And then you look at that price to earnings ratio, sitting at 6.5.
Right, exactly. And I think that was another thing that they pointed out that really makes it appealing, that PE ratio of 6.5 compared to the S&P 500 average, which is much higher, like 26.6.
Yeah.
So on the surface, you think, wow, okay, this looks really undervalued.
It does. Yeah, I mean, that low price to earnings, it really is like a siren song to those value investors.
Yeah.
It suggests that maybe the stock is cheap relative to its earnings potential. But as we'll see, there's a lot more to the story than just that one number.
Especially when you have, things on the horizon that could impact those future earnings. And then, of course, you can't forget about that dividend yield.
Oh, yeah.
Which is pretty attractive.
Yeah, 6% annually.
6% annually?
Yeah.
That's a significant return.
Yeah.
Just for holding the stock.
Yeah, and I think, for people who are looking for that passive income, that can be a big draw.
Yeah, it paints that picture. You buy in, you potentially get a cheap stock.
Right.
And it's paying you just for owning it.
Yeah. And then on top of all of that, they also talk about how, Ford has shown some resilience in the past. They specifically mention the COVID pandemic and how when everything went crazy, the beginning of 2020, Ford's stock actually did really well.
Right.
It went up 170% compared to the S&P 500, which was only like 69%.
Yeah, I mean, that's worth noting for sure.
Yeah.
It does show that they have some ability to navigate through difficult times.
Right.
But I think the caveat there is that each challenge is different.
Yeah.
Whatever worked for them then might not be the same set of factors that they're facing now.
Exactly. Yeah. So it's good to keep in mind, but you can't just rely on that.
Right. Exactly.
So we've got this, lower stock price, this seemingly cheap valuation, a strong dividend, and this history of recovery. It seems like a pretty good setup.
Sure does.
But then the article takes a turn and starts talking about what they call the dicey part.
Right, they do.
So what's the big red flag here?
Well, the main concern that they raise, and the one that really kind of shifts the whole analysis, is President Trump's proposed 25% tariffs on automotive imports from Mexico and Canada.
Wow, okay. So this is getting into politics now.
It is. And it's important to remember that, we're just reporting what's in the article.
Yeah.
We don't endorse these tariffs.
Right, we're not taking sides.
But this is the potential reality that Ford's facing.
Okay, yeah, and they actually say, that's 17% of Ford's North American production, right?
Is in those two countries, Mexico and Canada. So these tariffs would be a direct hit to Ford.
Yeah, these aren't just abstract policy discussions. This is a direct tax on a significant portion of their vehicles. So how would that affect Ford financially?
Well, that's a good question. How does that actually work?
Well, essentially, it increases the cost of bringing those cars into the U.S. And then Ford has a couple of choices. They can either absorb that cost, which would reduce their profit margin, or they can pass that cost on to consumers in the form of higher prices or most likely a combination of both.
Yeah, I was going to say probably a little bit of both.
Right. But it's likely not going to stop there.
Really?
The article mentions the potential for retaliatory tariffs
Oh, wow.
from Mexico and Canada. And that could impact Ford's exports, creating a much larger trade war.
Oh, man. So it's like that domino effect.
Exactly. One tariff leads to another, and pretty soon everyone involved is facing higher costs and probably reduced demand. Yeah, and this isn't just about Ford. This is about, like, everyone who buys a car.
Right. It's going to hit consumers.
Yeah.
And they actually give some numbers in the article about potential price increases.
Yeah, like how much are we talking?
Well, they suggest anywhere from $4,000
Wow.
to $15,000 per vehicle,
That's a lot.
with an average of about 13.5%.
Yeah. I mean, the average car payment right now is like $738 a month.
Mm-hmm.
So if you add 13.5% to that,
Right.
that's a huge increase.
It's a significant burden for a lot of potential buyers.
And then they even bring in data from the Wall Street Journal, which says that these tariffs could add another 15% to a buyer's monthly income.
Wow.
Just to cover that car payment.
Mm-hmm.
So, I mean, that really puts it in perspective.
Yeah, it really highlights the affordability issue.
Yeah.
And it's not just like a small increase.
Yeah.
It could really change whether people could even buy a car.
Yeah.
And to really underscore how seriously Ford's taking this,
Yeah.
the article includes a quote from their CEO, James Farley.
Oh, okay. From the fourth quarter earnings call.
Mm-hmm.
What did he say?
Well, he said, and I quote, "Tariffs at a 25% level from Canada and Mexico, if they're protracted, would have a huge impact on our industry, with billions of dollars of industry profits wiped out and adverse effect on U.S. jobs, as well as the entire value system in our industry. Tariffs would also mean higher prices for customers."
Wow. So he's not mincing words.
No, he's not.
He's really laying it all out there.
Yeah, and it really highlights the gravity of the situation. This isn't just an analyst's opinion. This is coming from someone at the top who's directly involved in the industry, and they're really worried about this.
Yeah. So we started out talking about why Ford stock below $10 might look good. We've got the lower price, the PE ratio, the dividend, the history of bouncing back. But then we hit this tariff issue, and what do they ultimately conclude?
Well, based on their analysis, the Motley Fool concludes that Ford stock is not a buy right now.
Okay. They're saying don't buy.
Yeah, they're saying avoid it. The potential negative impact of the tariffs is just too big.
Okay, so they're really putting a lot of weight on that.
They are. They're saying this is disastrous for the auto industry.
Yeah.
And it's not just a Ford problem.
Right.
It's a systemic problem.
And then they also talk about the time frame. You know, even if the goal of these tariffs was to bring manufacturing back to the U.S., that's not something that happens overnight.
No, it's a long and complex process.
Yeah.
It could take years to see any real results. But in the meantime, the tariffs would be, in effect, increasing costs
Right.
and potentially lowering demand.
So for the foreseeable future,
Right.
we're looking at high tariffs, which means high prices,
Right.
which means potentially lower car sales. And then what happens?
Well, that could ripple through the entire economy,
Yeah.
potentially leading to a broader slowdown,
Wow.
which would, of course, hurt automakers even more.
Yeah.
So while it might look like a bargain based on, those initial numbers,
Right.
the article argues that the risk from the tariffs
Yeah.
outweighs any of the potential benefits.
Okay. So even though it looks good on paper, they're saying...
They're saying be careful.
Yeah.
Look at the bigger picture.
Okay. So to summarize,
Yeah.
Ford's stock is below $10.
Mm-hmm.
It looks appealing based on the PE ratio, the dividend. Ford's also been pretty good at bouncing back from hard times.
Right.
But then we've got this big issue
Right.
with potential tariffs,
Yep.
which could lead to higher car prices and a big slowdown in the auto industry. So the Motley Fool is saying, don't buy Ford stock right now.
That's right. The tariffs are the deciding factor.
Yeah, it's that classic tension
Mm-hmm.
between something that looks like a good deal and a really significant macroeconomic factor.
So I think for you, the listener, the takeaway here is to think about how these tariffs could impact not just companies like Ford, but the whole economy.
And how might that affect your own financial planning, your purchasing decisions, the things that you buy?
Right.
It raises some interesting questions about how connected we all are through global trade and how something like a tariff can have such a ripple effect on our everyday lives.